At futures this morning, as you can see, we've got the Dow up 138, NASDAQ up 58.5, S&P up 13.25. Investors are focusing on quarterly results this week from big banks, including J.P. Morgan, Citi, Wells Fargo, and Goldman Sachs. The second quarter expecting to show COVID-19 still affecting our markets. Let's bring in this morning ProShares global investment strategist Simeon Hyman. Also joining the conversation for the show for the 3 hours we've got him, Polster and Bislansky and Partners President Lee Carter is with us, Senior Fellow at the National Taxpayers Union and Forward Strategies President Mattie Duppler, and Real Clear Politics co-founder and President Tom Bevan. Guys, good morning to all of you.
Good morning.
Good morning, Cheryl.
All right. Well, we've got a lot to talk about, Simeon. I'm going to start with you because obviously earnings is kicking off this week and the estimates are all over the place. Analysts seem to be somewhat flying blind going into what we call the COVID quarter now. What's your expectation?
Well, the consensus has earnings falling somewhere between 40 and 50% from last year, but I just don't know what you do with that number. I mean, you have very little visibility. I mean, we've seen a market that basically has had a tug of war from some good economic numbers, like very strong ISM manufacturing, some upside surprises in the recovery of the labor market, of course, facing off against the tough information with regards to the virus and the uptick, particularly in the Sun Belt. So I think you have to almost look past earnings. I think you got to focus old school and look at price to book. At least that's a little bit of a measure of longer term earnings sustainability.
It's interesting, too, as well, Tom, as we look at where we're at with stimulus and the government, obviously the markets have been banking on stimulus and more stimulus. But, from the political side, that might not be really a possibility before the end of the month of July.
No, Congress is out, and it's unlikely that they're going to get anything done. They're talking about trying to get, I think, a fifth package done. And Trump has mentioned something about new stimulus checks. We're hearing stuff about, hundreds of billions of dollars for schools to help them deal with getting kids back into schools and all the measures that are going to take. But it's unlikely to see anything getting done in the short term just because of the logistics of it, number one, and two, the politics of it. I mean, there's heavily, there's a big divide on Capitol Hill still.
Yeah, that's true. And Simeon, going back to the issue of the quarter, I mean, I was looking at some of the expectations now because this is going to be obviously a huge, a negative quarter for American companies, but energy companies, consumer discretionary, industrials, those are kind of the sectors that the analyst community has their eye on for the biggest falls. Is there upside surprises in any of those groups, in your opinion?
Well, those are for sure hot spots. And one way you can see that is not just to look at price action, but if you look at dividend sustainability, the sectors that you've mentioned have had the preponderance of dividend cuts so far. When you look at valuation, we know how far, tech has run. If you take tech and the pieces of consumer services that are related, communication services that are related, you've got 1/3 of the S&P 500 at this point, and those valuations are really sky high. But this time around, as opposed to 20 years ago, those companies actually make a lot of money. In fact, their return on assets are substantially higher than the market. So just rotating the value doesn't necessarily make sense to us. We think moving to the middle of the gauge in terms of some quality plays that have better returns on assets, but also are trading at less in the market, make a lot of sense. But those sectors you noted, definitely some risk on the earnings front.
Yeah. And Mattie, another topic is going to be online retail in general, Mattie, because that's going to be, again, the COVID quarter. That could actually be a positive story more than we expect because, well, we're all stuck at home and we're buying everything online.
Well, we might be, Cheryl. That's really the question. Is there a pent-up demand proposition here that really makes up for the loss in the last two quarters? I mean, Simeon really hit on the head when he said we have to look through the earnings this week because it is a weird week. Not only are we waiting on stimulus from Washington, we've got the Fed buoying stock prices in a way that we haven't seen in recent times, but it's also tax day. Remember, Wednesday is that delayed tax deadline, which means businesses are paying their quarter one and quarter two taxes after those being delayed. That's about $1 trillion in money sitting in the private economy that's going to get pulled off the sidelines back into Treasury. I'm not sure that would have a positive economic effect if we weren't in this otherwise very strange environment where essentially the Fed and Congress are what the market is watching.
Yeah, absolutely. And they have been for the last 3 months. And not seeing eye to eye, you've got the Federal Reserve and the Treasury Department disagreeing reportedly over that Main Street lending program. This was reported in the Journal, Simeon, and I want to take this to you. The Fed Fed wanted easier terms. They wanted more risk for the government. Treasury was like, wait a minute, more conservative approach. Simeon, your response.
Look, we need both monetary and fiscal stimulus at this point. And I think that if we don't get a second package out of the administration and Congress, then I think there is a little bit of risk to the market. But if you look at the response overall, both monetary and fiscal, to the pandemic crisis, it's overall a lot faster than what we saw in the great financial crisis. And I think that's a lot of what folks are looking at in terms of keeping equity prices where they are, because those stimulus programs are the key to allowing companies to turn back almost like a light switch to really mitigate the longer term damage to the economy. Mm-hmm. So I think so far you have to give a decent grade to both monetary and fiscal stimulus, but we do need more.
Yeah, and many would say that the PPP overall was a success as well, and that was stimulus in addition to the Main Street lending program. Simeon Hyman. Simeon, thank you for being here this morning. Appreciate you getting up early.